Good morning, students. Welcome all of you to today's class. Today, we are continuing with the chapter admission, and the topic is preparation of revaluation account, capital account, and balance sheet. Actually, we were studying so many treatments in this chapter from the beginning onwards. Ultimately, what we have to do is we have to prepare what the final accounts of the partnership firm. So after the admission. So the main accounts are a revaluation account, then capital accounts, and a balance sheet. So first we have to make revaluation, followed by capital, then balance sheet. So this is the procedure. Usually to do this only we studied all the other topics. So yeah, usually in CBSE exam till last year they asked one 8-mark question from this chapter, and this only either journal entry they ask for 8 marks, or revaluation account, capital account they may ask, or these three: revaluation, capital account, and balance sheet. Okay, so this was the system till last year. I don't know the in the coming year any changes will come or not. Okay, so anyway, till today no changes are there. So the syllabus everything as it is like last year only, so we will study the same thing. Okay. So today this one actually it is not a new thing for you. I think you remember the chapter change in profit sharing ratio. There also we studied in a different way. There we studied if the partners want to distribute, don't want to distribute, like that, and different cases were there. So here no such cases are there. Here after admission, they prepare a balance sheet and a revaluation account, capital account. So everything will change after admission. So we have to incorporate all those changes in the accounts. Okay. So in one question we'll discuss. So here the balance sheet of A and B in the proportion of 3 by 5 and 2 by 5. So their ratio is 2 by, here it is there, 3 by 5 and 2 by 5. Okay, 3 by 5 is to 2 by 5. This is their ratio, remember. Now other items in the balance sheet is given. So like this only question will be given to you in examination also. On balance sheet and other adjustments will be there. Whatever we studied, no, reserve treatment, goodwill treatment. Then one more thing is there, that is revaluation account. So revaluation account, how to prepare, we already studied the same rule only. So revaluation account is a nominal account. All expenses and losses will be debited, and all incomes and gains will be credited. So same rule you have to follow. So already I told you one equation. Revaluation account means debit side what you have to write, decrease in asset, because when the value of asset decrease, it is loss for the business, and increase in liability, so this will be debited. I hope you remember what we studied there. Okay, if you forgot, just check that video. Okay, so I'm not discussing revaluation account here, we already studied it. This is debit, so decrease in asset, increase in liability, what, debit. Now increase in asset, opposite, increase in asset and decrease in liability will credit. So debit means was all losses, debit all expenses and losses, credit all incomes and gain. So loss means debit, profit all credit. So this is the rule we have to follow here. Okay, so if the value of asset decrease in our asset value decreasing means it is loss for the business, but a liability value decrease means profit for the business. If liability value increase, loss. So decrease in asset, increase in liability, loss, and reverse also. Okay, so here items, will see what are the items given in the balance sheet. Creditors given, then bills payable, provision for doubtful debts. So provision for doubtful debts either can be deducted from debtors in the asset side here. So instead of deducting from here, they have given in the liability side. Okay, both the same effect only. Instead of deducting it from the debtors account, so they directly given where in the liability side. So provision always you can treat or remember like a liability. Increase decrease when you take, no, if you get confusion on provision, because sometimes provision will come on the asset side also. So provision always you treat like a liability. If provision is increasing, increase in liability. If provision is decreasing, decrease in liability. Okay, now capital account, as usual capital is given A and B. Then on the asset side, freehold premises, 10,000, machinery and plant 4,500, furniture 900, stock 12,500, debtors 22,500, then investments 4,250, sorry 4,250, then cash 1,660. So these are the items given balance sheet total. Okay, now we'll see the adjustment. So adjustment, what are the adjustments given? They admit C. So C is the new partner on 1st April 2018, and the agreement, terms of agreement. So I told you this is a reconstitution. The partners has to agree on certain things. So their constitution, or the what are the things they agreed upon, that is what given here. C to bring 6,000 as capital. So we studied new partner may bring goodwill on the capital, and he may not bring goodwill. That situations also we studied. And 4,800 for goodwill. So he is bringing what? 6,000 capital and 4,800 for goodwill. Next, 4,800 paid by C to be credited to the loan account of A and B. Here this is goodwill amount brought in by C, the new partner. What we call it as premium for goodwill. So treatment of goodwill we already studied. When the new partner brings the amount of goodwill in cash, that amount is called what? Premium for goodwill. So that amount who will share? All the partners will share in the sacrificing ratio. Goodwill always will be shared in the sacrificing ratio. You remember? Okay. Now, but in this question specifically they are saying this 4,800 brought in by C, this one means what? Goodwill. This should be transferred to loan account of A and B. So it should not be, normally we transfer where? To the capital account. Partner will take it away. Transferring to capital account means the old partners are taking that money into their account like a deposit for them. But now they want to transfer to the loan account of A and B, to be credited to the loan account of A and B. That means what? That much amount is put in the credit side of loan account of what? A and B. That means the firm has to pay some amount to who? A and B. So instead of paying amount to them, instead of that they are charging what? Or they are putting this loan amount to the this premium amount to the premium for goodwill amount to the loan account of the partners. Okay, so A's loan account, B's loan account. So it will go where? To the credit side of loan account. So what will come? Premium for goodwill account debtor to, usually we write premium for goodwill account debtor to A's capital, B's capital. So instead of A's capital, B's capital, you have to write what? A's loan account, B's loan account. Understood? Okay, we will pass journal entry. Then freehold premises undervalued by 5,000. Yeah, so this undervalued by, each and every word is important. Undervalued by, undervalued by means undervaluation, overvaluation, you have to remember properly. So undervalue mein matlab what? By mistake they undervalued. That means that much amount should increase. So when they say undervalued by 5,000, then what you have to do? You have to take it as increase in the value of asset. Is it to be increased? Okay. If the sentence is undervalued to 5,000 means what? Then you have to take this 5,000. Now our difference you have to take. Understood? Balance sheet value, how much? Balance sheet value is 10,000. Freehold premises 10,000 is there. So now they are saying undervalued to 5,000. Then you have to take the difference between 10,000 and 5,000. So what will come? 5,000 will come in the revaluation account. Okay, revaluation account, remember we take only the difference between the amount. Difference matlab how much a decrease or increase, that only you have to take. Okay, now here freehold premises undervalued by 5,000. So whenever they say buy with any amount, that amount you have to take the same amount, 5,000 only you have to take. Don't take the difference. And it means what? It should be increased. Okay, to be increased. Now machinery of plant overvalued by 500. That means by mistake they put 500 rupee more in the balance sheet. Now it should be reduced. When they realize the mistake, what you have to do? Now you have to correct it. So what is the value of machinery? 4,500 is there. So in that actually 500 rupees extra. So 500 rupee we have to minus. Decrease in the value of asset will come. So freehold premises what? Increase in the value of asset. Machinery is decrease in the value of asset is the treatment. Understood? No? Okay. But if it is 2, undervalued 2 means it is decrease only. Overvalued 2 means increase. But undervalued by means it is increase. You have to add. Then overvalued by means decrease. Understood? So that is the difference in the meaning. Okay. Now stock to be discounted 10%. So stock discount means what? Decrease only. So decrease in asset. What item they are saying that you see. That item belongs to asset side means that is decrease in asset or increase in asset. That item belongs to liability side means that is decrease in liability or increase in liability. And provision for doubtful debts to be reduced. So provision for doubtful debts I told you it is like a liability. So now they are saying 1,000 rupee to be reduced. We have to deduct 1,000 rupees from this 4,000. Then means deduct, decrease, discount, all these things what? Decrease only. So decrease means income. Decrease in liability. So where we put on the credit side. Now investment are to be brought down at their market price. It being rupees 3,200. So investment we have to take 3,200 is the market price. Here no investment fluctuation reserve is there. So to cover the loss. Now we'll see what is the investment value in the asset side. Investment 4,250. But now they are saying investment you have to value 3,200. So decrease or increase? Decrease. Okay. So that also investment we have to take as decrease. Understood? Prepare journal entries, capital account, opening balance sheet. Also calculate new ratio. So these are the things we have to do. So first journal entry. Journal entry what? For all these things. Capital you can pass journal entry. Goodwill you can pass journal entry. Then this premium for goodwill transfer to loan account, that you can. For all these adjustments only you have to pass journal entry. So don't be confused what to pass journal entry and all. The adjustment items whatever they give, for that you have to pass journal entry. Okay, now we'll see one by one. Now I put here like this: increase in asset and decrease in liability. Okay, increase in asset is profit for the business, decrease in liability also profit. So in revaluation account what we'll do? Revaluation account it is credit. See here, revaluation account is credit. So which are the items? Increase in asset, this is increase in asset, but provision for liability, decrease in liability. So both same treatment. So freehold premises account debtor, provision for doubtful debtor 1,000, to revaluation 6,000. Understood? So this is the journal entry for freehold premises and provision for doubtful debts. Already I told you freehold premises is increasing by 5,000 because undervalued by, so we have to increase now. Now provision for doubtful debts we have to reduce, so that is liability, so that also will come together. Okay, now Next journal entry, decrease in assets. So which are the assets decreasing? I told you machinery undervalued, overvalued by 500. So we have to decrease it now. Then stock also to be discounted 10%. So what is the value of stock? 12,500. So 12,500 into 10%. That means 1,250. That is what written here. So this 500 machinery already overvalued. So we have to decrease. Then investment, they said investment value is to be taken as market value, that is 3,200. 3,200. So in the investment balance sheet, what is the value of investment? 4,000, 4,250. Now they are saying the investment value is 3,200. So what is the loss here? 1,050. So that difference we put in the investment. Understood? Okay. So that is for. So now this two journal entry I passed for what? For the preparation of revaluation account. So revaluation items over. So this is increase in asset, decrease in liability, decrease in asset only remaining. Okay. Revaluation items over. Understood? No? When you pass, you can pass, make a journal format and write together. No need to do like this. Okay. Now revaluation account, when we prepare, we may get profit or loss. That here profit will come when you prepare and put revaluation account. I will show you how to make a revaluation account also. So here revaluation account will make. So revaluation account means, it got what? One debit side, then amount, credit side amount. Okay. So particulars amount, revaluation account. Now here this freehold premises asset value increase. Whatever asset value increase, here we write. I'm writing short form. Freehold premises, how much? 5,000. Then provision for doubtful debts, liability decreasing, that also same side, 1,000. We already passed in the journal entry. These two items. Then debit side, to machinery and plant, revaluation to machinery. So it will come on the debit side, 500. Then stock, to stock, 1,250. Then to investment. When you write properly. Okay. 1,050. Okay. So these are the items in the revaluation account according to this question. So after putting this, you see which side is more. Usual ledger balancing. Okay. Which side is more? This side is more. 6,000. 6,000. This side how much? 1,000. 2,000. 2,750. 2,800. Okay. So 2,800 will come. So we'll minus 6,000 from 2,800. So we'll get to how much? 3,200. Okay. So this 3,200 is the profit. Now credit side is more. So credit side means profit. Remember, debit side means loss. If this side is more, then you put total here first, then take it here. You will get the answer here. Now this credit side is more. So 6,000. Then brought it here. Here. Then remaining after these three amount total deducted. So we are getting the answer 3,200. So this 3,200 who will share? All the partners only will share. In which ratio? 3,200 is the profit. So they will share in their ratio. Their ratio is 3:2. 3:2 is the ratio of A and B. So 3,200 when you divide into 3 by 5 for A will get 1,920. B also 3,200 into 2 by 5. He will get 1,280. Okay. So now revaluation profit also shared. Where it will go? A and B means A and B's capital account. Wherever you write the partner's name, that means it is going to the partner's capital account. Okay. Now will come. See, this is the journal entry for revaluation profit. Revaluation profit transfer. Profit is 3200, is capital 1920, and B's capital 1280. Understood, no? Okay, so what I told you clearly, first you make journal entry for what? Revaluation account items, increase decrease in the value of assets liabilities, make, then you make a revaluation account roughly, find out the profit or loss, that profit also distribute, pass journal entry for that. Now what are the items remaining, we'll see. He brought cash, capital, then he brought goodwill, so we didn't pass journal entry for his capital and goodwill. That's two items remaining. So just check the question only what is remaining. So now remaining is capital and goodwill. So cash and goodwill we already studied. What we write? Cash account debtor to C's capital 6000, then to premium for goodwill 4800. So he brought 6000 capital and 4800 as goodwill. So how much he brought total? 10800. Okay, but this premium for goodwill who will share? Partners will share usually in the sacrificing ratio, but here they said they have to share it to their loan account. Okay, okay, now this premium for goodwill where we have to transfer to the loan account. Okay, okay, so premium for goodwill usually we divide in sacrificing ratio. So here no change in the sacrificing ratio. Sacrificing ratio will be same as older ratio. What is 3 is to sorry, yeah, so 3 is to 2 is the sacrificing ratio, same old ratio. So 4800 divided in this ratio 2880 920. Only difference, instead of capital we are writing what? Loan account. That only the difference that is mentioned in the question. That's why we transfer to the loan account. Now we'll make the what? Capital account. So capital account, you know how to start the capital account with the capital of the partners, that where it will be in the balance sheet, opening balance. Okay, so opening balance of opening balance of A and B 24,000 9,000. Then revaluation profit also they are getting. So wherever A and B is credited or A and B C is there in the journal entry, that we can post, or otherwise also we can write without journal entry. So revaluation profit they will be getting 1920 and 1280. Then C brought his capital by cash 6000. Okay, so these are the items only. So this is opening capital. The revaluation profit only A and B will get, C will not get. Then by cash, this is the capital of C. Okay, so total it and bring it here. So the total is 25,920 10 280 6000. Okay, so this much only. So goodwill we transfer to the loan account. That's why we not posted here. Otherwise, what will come? Premium for goodwill करके इधर आएगा. Okay, so we transfer to loan account. That's why we are not writing here. Understood? No? Okay. Now balance sheet. Balance sheet, now you have to put all the changed value. Whatever decrease, then you minus and put what any asset liability increase, you add and write. That only the changes you have to make. Now you see in the old balance sheet. Okay, just I show you the question one by. See here in this format itself we can write. First item is what? Freehold premises 10,000. Okay, now in the new balance sheet this 10,000 will not come because the freehold premises value is changed. How much? Undervalued by 5,000. No, undervalued by means by mistake it is decreased, so now we added back. So the new value of freehold premises will be what? This 10,000 plus 5,000. Understood? So like that each and every item whatever you have written in revaluation account, just to see there and make changes. So freehold premises become 15,000. Understood? Okay, now Okay, 1 minute. This is not visible properly. Okay, 15,000. Okay, then machinery also what happened? Overvalued. Matlab we have to reduce. It was 4,500. Now it become 4,000. So everything new value you have to write. New value means if it is not changed, adjustment whatever given, that only you make change. Other item. Suppose for example furniture 900 was there. No adjustment for furniture. So the same 900 you have to write. Then stock also 10% discount. So 12,500 is the normal matlab the original amount. Now we have to reduce how much stock is reduced by 10%. So matlab stock original value is 12,500 minus that 1,250. So 11,250 will come. Okay, understood? Okay, now debtors, they didn't say anything, only provision we have to make change. So debtors also same amount we can put in the question, 22,500, because provision is on liability side. Here also we write liability side only. Then investment 4,250. Investment adjustment was there. They said it should be 3,200. So from investment 4,000 4,250 we can minus how much, that how much decrease investment, 1,050 decrease. You see the revaluation account. Okay, then the new value is 3,200. Okay, okay, same way liability side also, creditors no change, and the same you can put. Bills payable also nothing adjustment. Doubtful debts, they said 1,000 rupee decrease. So in the question you can see 4,000 is there. So 1,000 rupee we have to minus. So 4,000 minus 1,000, it will come how much? 3,000. Then the premium for goodwill we transfer to loan account. So A's loan, B's loan, how much? 2,880, 1,920. Why they that why when we transfer to loan account and showing on liability side, that means what? The firm, the partners has taken, sorry, the firm has allowed loan to the partners. Means the firm in business they used that money. Later these partners can take it. It is like borrowing from the partners. Okay, so for the business purpose they used this money. That is why they transferred it to the loan account. Then capital account. So capital account balance. So capital account we prepared and the final balance answer in that balance carried down, that is 25,920, 10,280, then 6,000. Okay, so balance sheet will tally. So this way you have to write. Now here cash is there. This cash will change. Actually the cash in the question is 1,660. So you remember cash position will change because the new partner is bringing 6,000 capital and goodwill also 4,880 he brought. That means we passed the journal entry what? Cash account debtor to capital to premium for goodwill. So cash account if you prepare, cash will increase. Okay, the new partner brought 6,000 capital plus 4,800. Okay, this you can write in working note. Okay, so when you add this you will get 1,460. 12,000, so not 1,000, 12,460. So this is the new cash balance. So remember cash balance always changes will be there, but it is like hidden items. Like we sometimes we forget to write the cash. We write exactly what is given in the question, but it is not like that. Cash balance always will change in the case of admission because he is bringing capital, he is bringing what? Goodwill also. If he is not bringing capital and goodwill, it won't change. But some other cases also, whenever cash transaction is happening in the business, of course cash position will change, either increase or decrease according to question you have to do. Okay, so this much only. The preparation of revaluation account, capital account and balance sheet. and the new ratio you can calculate. Okay, I'm not telling that because old ratio is given, no, 3:2. The partner is admitted for, if you want just I'll explain. New ratio calculation, old ratio is what, 3:2. New partner is admitted for how much share, 2 by 7. So only these two details are there. Already I told you sacrificing ratio will be the older ratio, because they are not saying the new partner acquiring or he has taken this much portion from A and B. Nothing is given. Only old ratio and the portion of C is given. This is the portion of C. Now what to do? How to calculate the new ratio? New ratio, how to calculate? A is equal to the remaining share, how much we have to calculate. So remaining share is how much, 2 by 7 given to C means remaining share will be what, 5 by 7. So multiply this 5 by 7 into old ratio. So A's new ratio will be 3 by 5 into 5 by 7. B's new ratio will be 2 by 5 into 5 by 7. Okay, C's ratio 2 by 7 is given, so that you can make equalize. Okay, so that way you do. Understood, no? Hope I hope you understood. Okay, so this much only for today. Any doubt, please contact, clarify the doubt. Don't keep any doubt in your mind. Okay, thank you so much. Take care. Bye.